Hi, I'm Powell Slaughter with Furniture Today. Welcome to TDM News Desk. With me today is Michael Barron. Michael is founder of Barron Associates, which is a broker of lending and factoring services to the home furnishings industry. And Michael keeps up with what's going on as far as creditors' attitudes toward home furnishings, vendors and retailers. Mike, what are the factors out there right now that are affecting creditors' attitudes toward the furniture space?
So there are a number of indicators on a macroeconomic level, a more consumer product space level, and then maybe more specific into the furniture industry. And so obviously we're starting to see some trends on the large picture, like inverted yield curves, a slowing world economy, specifically in Europe and China. We don't think that this current low unemployment rate can hold. It's been a good ride. Consumer confidence has been at an 18-year high. It's starting to taper a little. Manufacturing is down. These larger indicators say that the economy is going to slow or recede. We see indications inside of ancillary categories like textiles, where we're seeing slower payment streams, where vendors, or what we call the risk, are slow paying at an alarmingly higher rate, up 250% over what we've seen before. And then we continue in furniture to see bankruptcies and failures at a larger rate than what we used to see pre-2008.
Okay.
All of those indicators judge whether a factor or a bank or the trade credit insurance companies are going to expand risk in the space. And I wouldn't expect that we would witness that in the next year.
Okay.
But those larger indicators are used to only do one thing, and that is establish price. The real credit decision is made at the risk level.
Okay.
So if there's Powell's Furniture, we're going to underwrite Powell's Furniture solely on Powell's Furniture wherewithal, not the larger.
Well, Mike, real quick, 6 months ago, you and I were kind of talking about some of the same things when we were looking at factors that were going to include, maybe impact the availability of credit to retailers and vendors. If you're a furniture company, what do you need to do to ensure that you maintain your lines of operating credit?
So, generally speaking, in our industry, when people get a call from an underwriter or a monitor, Dun & Bradstreet as an example, they don't return those phone calls.
Yeah.
And we've witnessed again and again misinformation. And if I may, here's an example. We have a large top 100 retailer who's about to open a new store. And they're spending a lot of money preparing for this new store, and there was a misunderstanding among one of the insurance companies, and the rate got pulled, and somebody didn't pick up the phone. So here's the first takeaway. When somebody calls you from a bank, a factor, an insurance company, take the call. You don't have to open up everything and give them your complete unaudited financials, but you got to pick up the phone and you got to talk to them.
You got to show a little skin.
Well, yeah, you gotta open the kimono, if you'll forgive the characterization. But if you don't, they have a tendency to be kind of punitive in response.
Okay.
So we want to make sure that we give them as much information.
Great. Well, you heard it there. Pick up the phone when you get that call. And Mike, before we go, I just got to ask, man, who does your hair? Because my guy can't do anything.
I've got a guy, and actually he comes on the road with me because it's like crazy here with the humidity.
Thanks everybody for watching.